All right, what is up, flippers? It's Marecll here. Welcome, everyone. Here I'm with a new recap video about today's GBP USD trade that I executed in London session. So first of all, I will show you the markups that I sent you, and after that, I will show you the markup update that I sent you. And then I will break down every single criteria on the live chart, use a replay tool, just do the usual stuff. So today we executed a win on GBP USD, which I shared the trade idea of. Basically, the trade idea was shared in the group. So lots of other guys took this trade. 2 students passed phase 2 and phase 1 challenges. So yeah, congratulations again. Lots of you guys ate on this trade, and I'm proud of you. So let's just break it down. What did I send you here in the markups? Let me just start at the first region of this markup, the demand mitigation. So here in this region, we had a 4-hour demand mitigation, where afterwards price changed the character to the upside. At this region, we were looking for longs, right? But after price broke below the swing low point, which was located here, indicated a swing break of structure to the downside, my whole bias changed to bearish. The swing break of structure has happened from this supply region here, from this 50-minute supply region, which price mitigated right here. And then it swept out the liquidity or changed the character to the upside. We didn't know at that region yet. That's why I wrote it here that we don't know yet. We have to confirm it with the zone reactions, change of character, sweep. So basically the reason I wrote this text here is because I didn't know if it was change of character, if it was a sweep. Because if it was a change of character, then this demand will be able to hold price. And if this demand holds price, we will be able to take longs all the way up to this supply region here. But if it was just a sweep, then the next recent supply after the sweeping movement will be able to confirm price, and it will be confirmed as a break, as a sweep and not a break of the supply level, not a change of character. So once again, if, price comes back down to this demand here and confirms it, then this whole movement here is confirmed as a change of character. Because if this demand is getting confirmed, then it means that price really broke above this supply, and we can continue the overall bullish movement to the upside. But if price reacts on this supply first, and comes back up to this supply first, then it means that it was only a sweep of this liquidity right here. And if the next recent supply after the sweeping movement is getting confirmed, then we will continue the overall bearish movement. So basically that was the reason that I wrote this text here, because I didn't know if it was a sweep. I didn't know if it was a break. I just wanted to confirm the areas. It was basically a two-sided knife, because it could have gone short, could have gone long at the same time. All we had to do in this region was to confirm the areas, confirm the supply or confirm the demand, whichever is getting mitigated first. So these were the easy plans basically today. I've been waiting for the mitigation of this supply or waiting for mitigation of this demand. Of course, after the supply mitigation, we had another plan where if price breaks above this supply, we will be able to take longs to the upside to this supply here. So these were the three easy plans we were about to follow in this session. So let me just show you what has happened in real time. So when I sent you the markup, price was somewhere around, I believe here. Price was somewhere around here when I sent you the markup. So at this region, we were waiting for either the mitigation of the supply or either the mitigation of the demand. Two simple scenarios. So what has happened? Let me just play price forward. So, sorry, one important thing that I left out from this markup is that we had liquidity. Also, we were waiting for the mitigation of this supply here, is because this was liquidity built up for this region here. And that's why I didn't really count this as a valuable supply, because this was part of this nice trend line liquidity built up for this extreme region. So yeah, let's just see what has happened in lifetime. Here was the liquidity that I just mentioned. Here was the 50-minute supply where we were expected a reaction. And price, after the session open, started to go up. So it seemed like that it's going up to the supply and not down to the demand. Let me just play price forward. You can see that price mitigated the supply. Exactly 1 hour after the session open, price mitigated the supply and presented a really nice V-shaped rejection after the more than 50% mitigation of this supply. So 3 criteria were already triggered. I mean, not just 3, but 4 criteria were already triggered. I will count the criteria later. After the supply mitigation, price, what did it do? You can see it all the way here, that it reacted on this less recent demand level. It mitigated the less recent demand. This reaction wasn't strong enough to break the structural high point to the upside again, wasn't strong enough to break the supply and continue the long movement. Meaning if it's not strong enough to break the last recent structural high point, it will flip the demand, which has happened. So here's a flip zone, a perfect flip zone, not liquidity, but a flip zone. And after this flipping movement, price just simply broke below this low point, which means there was a change of character also. So price flipped the last recent demand and changed the structural low point character too, which is really, really strong because this whole movement has started and has happened with huge volume. So this is a really nice and huge volume candle. This is a nice volume candle too. But in itself, this volume candle was enough to open a trade. Of course, alongside with all of the other criteria. So basically, at this region, which you can see right here, I just sent you a markup update, which was a trade idea. I just sent you this exact markup update. You can see it in the group. You can see all of the updates afterwards. I just sent you that you can enter here on this order block, on this supply region. And I just marked the 3 pip stop loss here, but I just wrote it that you can use a bigger stop than 3 here if you want to. So basically, I just sent you a trade idea, which you could take freely, of course, out of your own will. Because if you're only executing this setup because I'm executing it, that's not the right way to trade. Because you have to execute the setups out of your own will, because those trades are fitting your criteria. And if you're executing a trade because something is confusing your mind, confusing your mind, and something is, in front of you, which isn't your own idea, that's not the best way to trade. But since this setup was so fucking perfect, I just wanted to share it with you because I was almost 100% sure that this setup will work out. And I'm usually sharing those setups which are likely to work out. So you've seen several other setups shared in the community before, and this was one of them. But I wanted to share a setup with you. I just wanted to give something to the community, some free money, which basically it was, because 2 students passed the funding challenges on this trade, and lots of other of you guys took beautiful TPs and profits on this trade also. But yeah, enough of talking. Let's just break down this trade. So here was a supply that I sent you. Perfect supply. I just used the 50% entry because the 3 pip stop loss couldn't cover the whole region. If you did set a limit order here on the full body, then the 3 pip stop loss couldn't cover the whole region, as you can see. That's why I used the 50% entry here. And I just buffer my stop loss to 3.5 pip. That's why the reason I wrote that you can use a bigger stop loss than 3 is because basically you could use risk entry on the extreme and on the decision low, but I wasn't really sure that the extreme is about to work out because basically it was part of this double tap. So you can see this double tap right here. And, it has been mitigated already. So it has been mitigated by the following movement to the upside here. It was part of the double tap. So I wasn't really sure if it's going to work out. Later in the updates, I sent you that do not even open a position on this extreme. You can delete the position on the extreme. So yeah. But the reason I used a 3.5 pip stop loss is because if the extreme is getting mitigated, then the 3.5 pip stop loss will keep me in. So basically, that was the whole trade idea. I was about to target this demand down here, but I tip it out on this demand. I will explain why. Basically, price is somewhere down here currently, so it ran down to 1-to-30 risk reward ratio. But I just closed my position in 1-to-6 risk reward ratio, and okay, the reason I closed it there is because I started to use a bigger account size. So I just stopped by my capital by a few more thousands of dollars and tens of thousands of dollars. So currently, I'm using a bigger capital, which I am trading on. And I just saw enough profit, which was 5K. On this demand, I just booked $5,000. So for my psychology, for my emotions, it was fine for me. I just wanted to close out the 5K, be happy for the rest of the day. And basically, that's why I closed the trade here. I could have let it run to my original TP, but this is how emotions control me personally. If I'm, I usually do this. I'm usually tapping at my account size like every quarter. So I'm usually adding more and more and more money to my account so I can trade on a bigger capital. And that's what I did in the previous days. And yeah, I have to get used to these. I have to get used to these new numbers. I have to get used to that I can make more money from the exact same risk reward ratio trade than before. So yeah, first trades on a on a bigger, sorry, just a small brain fart. So the first trades on a bigger account size after a tap up are always like this. I'm always closing my positions faster because, I see the same numbers that I used to see before bigger TPs. at bigger TPs. Yeah. So that's why I close it here. But you don't have to care about the original TP was this one right here, which has been mitigated perfectly. Lots of you guys TP'd out here on this 15-minute demand, which was the correct TP, but it wasn't the correct TP for my psychology and for my emotions. But yeah, never mind. Let's just see what has happened here. Basically, price tagged us in. So I used the 3.5 pip stop loss. Price tagged us in perfectly. And after tagging, it just hesitated for so long. I mean, it has hesitated for really so long. And at this region, when it has hesitated for 1, 2, 3, 4, 5, 6, 7, 8, 9, for like, let me just see, 24. It has hesitated for 20 minutes. 20 minutes hesitation around their entry POI. In the markup updates, you can read it back. It's in the Discord. I sent you that I'm not going to set it to break even. I'm not going to close it out to break even. I'm going to let it run. I have nothing to lose. That's what I was telling you. I basically told you that I'm not going to close it out in break even. I believe that was the major reason that most of you guys didn't close it out in break even too, because you were believing in me and I was believing in the trade. But yeah, congratulations, because that was the right choice. I didn't really want to close it out because I had so much faith in this trade and everything looks so perfect around this trade that it had a really low chance to actually not hit TP. So yeah, I didn't close it out, but at the same time, I sent you another perspective. And the second perspective that I sent you was a long. So I was planning to hedge here. I was planning to open a long position at the same time while I was in this short position. And the reason I wanted to do this is because basically here on the 5-minute time frame, we had a sub-demand mitigation. This is a sub-demand. The reason I call this as a sub-demand is because it's inside of the 15-minute structural high and structural low. So basically, this is the 15-minute structure, right? So on the 5-minute time frame, this is just a sub-demand, a substructural demand. But price has mitigated this demand after the supply mitigation. After the supply mitigation, it came back down to mitigate this demand, and it just gave a strong rejection on the 50%. After a strong rejection, it just changed the character here to the upside. And after a character changing movement, it left liquidity, double bottoms, for the character changing zone. So at the same time, while I was in the short, I even sent you this trade to the group. So I sent you 2 trades today. Here it is. So I sent you this trade. Why is it red? So I sent you this trade that you can open a position at the same time here while you are in a short. But basically, it didn't really work out because price swept the liquidity. And after this liquidity sweeping movement, after price wiped out the liquidity, it just came back up to the short entry POI without mitigating the demand. So when this has happened, I just told you in the GBP/USD chat or in the New York updates channel that I deleted my long order. I'm just only focusing the shorts. And once again, I even pointed it out, and I'm not closing out in break even. I'm either taking TP or either taking stop loss, no break even on this trade. And yeah, it has hesitated for a few more minutes around the entry when it finally started to move. It has finally started to move. And after it began to move, let me just extend this. After it began to move, basically, at this point, sorry, let me just play it forward and let it hit TP. So yeah, it did hit my TP for 1-to-6 risk-reward ratio. I just even live streamed it in live. I sent you a video about the TP hitting too. So everything is documented about the first trade on the new account size. So yeah, what did I want to say? Yeah, I wanted to say that after the break of this low point, so after the break of this structural low point, which is basically the right break-even setting point, I did set it to break even. So that was the only point when I did set it to break even. After this, basically price almost mitigated my break even point, but it just continued all the way down to hit my TP, where I booked $5,000 in profit. And basically, that's all about this trade. That's what has happened here. I will explain the criteria too, but let me just show you how it did run down to the original target point. So let me just switch to the 5-minute time frame because there will be a bit easier. On this 5-minute demand, price gave a small rejection. You will see that it gave a nice rejection to the upside. Then it went down to the original TP point where it did hit the 1-to-11 TP, 1-to-11 risk-reward ratio TP, which most of you guys took. So once again, congratulations to everyone who took this trade. Quickly, let me just explain the criteria. First criteria obviously was the higher time frame zone mitigation. Second one is the liquidation that is located right here. You know, liquidity has been swept into the supply, into the higher time frame supply. Third is the inefficiency and volume. Fourth is the pro trend. You know, 15-minute just broke the 15-minute swing low point, so it's a 15-minute pro trend. 15-minute supply zones are getting confirmed. Pro trend trade, pro order flow. After this fifth criteria, which is the first variable criteria, is the change of character and the flip also. You know, sixth criteria was the 50% mitigation of the higher time frame zone. Seventh criteria was a perfect V-shaped rejection. Eighth criteria was strong pro corrective pullback. Just look how stronger these short movements are than the long movements. Long movements are really, really corrective. Short movements are really, really impulsive all the way down. All the way down, sorry. Ninth criteria was a liquidity to target. That was nice. I mean, not nice amount, a small amount of liquidity that we could target right here below the demand. But there was this another liquidity target. That was the target for the my TP. So yeah, there was lots of liquidity that we could target with this trade. So that was the ninth criteria. At this point, when price actually tagged me in the trade, I didn't count this as a demand mitigation. I only counted this as a sub-demand mitigation, which I usually don't count as demand mitigations, you know. So for me, it wasn't an opposite-sided zone mitigation because this is just a sub-demand, a sub-structural demand, which is not a real demand for me. So yeah, 10 criteria, that's all about this trade. Once again, congratulations to everyone who took this trade. I hope this trade idea could help you. Actually, I'm planning to share more of these trade ideas in the future. But no, I don't want to become a charity service. I don't want to become a signal service. No, I will keep doing what I'm doing, which is teaching you guys on how to trade. But sometimes I will share setups like this, just like I did in the past two. So yeah, that's it, guys, about this trade. Thank you for watching this video. Cheers and goodbye.